Here's why Tesla bulls are infamous for their inflated valuations, and why you can be mistaken about the stock price of Tesla. Famous Tesla bull Ron Barron has forecast that the company will make a 3 to 5% return in 10 years. $3,000 is Cathie Wood's 5-year projection, which corresponds to a $3 trillion market. On the other hand, skeptics represent the extreme. Although it still has an underweight rating on the firm, Citigroup increased its price objective on January 27 to $313. More than 70 declining stocks have price predictions from JP Morgan Chase and JP Morgan Chase, respectively. I want to know why everyone thinks Tesla's stock is overvalued. Watch to find out more. We'll present a case for the negative outlook first. Tesla produced 305,000 vehicles in the first quarter of the year and delivered 310,000 of them, bringing its yearly production rate to over 1.2 million cars. There are now hardly any new Model X automobiles being produced or delivered, with 17 of them being leased. Although the company's new Roadster may have helped to revive this industry, there is still no word on when it will be made available. In our opinion, the company's vehicle business is divided into 4 sections. Model 3 and Model Y are examples of inexpensive cars in the first category, whereas the Roadster is an example of a high-end car that resembles a Ferrari. The company's work on self-driving cars is the 4th area of focus, while the 3rd category includes mid-high-end vehicle types S and X. The company made a huge deal out of the new Roadster, but the release date has been continually delayed. The most recent estimate is 2023. Whether it will actually occur in 2023 is still up in the air. Next are the S and X models from the firm. These models, in our opinion, are what shaped Tesla into the company it is today. Sales make up a relatively minor portion of the firm, and the company hasn't performed well in a while. The result is that the business barely generates a few $billion in annual revenue. Currently, there are vehicles that can drive themselves. This is still up for debate. FSD beta is real, but the business continues delaying it. Although Musk stated that it would be released this year, we don't know for sure. Therefore, the timeframe is somewhat speculative. Tesla has frequently delayed the implementation of fully autonomous driving, infuriating customers who paid a premium for the service and expected it sooner. We don't mean to imply that Tesla won't succeed, but Waymo would make a fantastic case study given its valuation decline from $200 billion to $30 billion. We'll examine the Model 3 and Model Y lastly. The industry anticipates that by 2022, mostly using these affordable models, it would be able to produce more than 2 million cars annually. As the world's leading maker of dependable low-cost vehicles, Tesla is growing more competitive and closer to entering the mass market. Toyota's 10 million annual vehicle sales and $280 billion market value make it a useful benchmark in this context. It's important to keep in mind that there is a significant difference between 2 million and 10 million automobiles produced annually, even with a 50-year growth rate. Ignoring the optimism of this time frame, let's examine what it would take for the company to reach a $5 trillion valuation and for a corporation to achieve a $5 trillion long-term valuation. It must have free cash flow over a specific level. It might not be at the time the company achieves the valuation, but a road to getting there must exist. Since we presume investors do not want a company with a 5x market valuation, only because inflation will reduce the value of the dollar to 1 to 5 times its current value, we will not take inflation into account. The most generous estimate is $5,000 in profit per delivered vehicle times $5 million in annual vehicle sales. If the company succeeds, there will be a total of $25 billion in free cash flow. At our 8 yield, we're investing $300 billion, or 10 times Waymo's percent valuation, in the self-driving industry. Energy storage is another industry. We'll give the corporation the benefit of the doubt and assume that it can increase its market share from its current level of 7% to roughly 20% over the coming decades. Although some could contend that it's too cheap given the company's success, this sector has never had a significant motive. Additionally, we'll provide a 20% margin, assuming a kilowatt-hour price of $150 by 2030. This is equivalent to $30 billion in capital expenditures and $6 billion in FCF. In the high-end automotive sector, we are now looking at EVs like the Roadster and even the Model X, and we think the best way to evaluate this company is to compare its earnings to those of its competitors. A high-end luxury company may be worth as much as the combined value of Mercedes-Benz and BMW, or about $30 billion in free cash flow. Tesla's valuation has surpassed the $1 trillion mark, but optimistic investors still expect the business to outperform the market. This is true, even though other companies, like Apple, may be able to expand further. From this point on, we think Tesla would have trouble because of its modest free cash flow and uncertain route to shareholder returns. Let's take a look at things from a different angle. Many people think of Tesla as an expensive stock, but as gas prices rise, public opinion seems to be changing. Tesla sales have already exploded, and we think this is just the beginning. With Russia, the world's largest producer of crude oil, the main component of gasoline at war, gas prices are likely to stay high for much longer than previously predicted. In addition, it's almost certain that many countries will experience inflation. Tesla cars are obviously pricey, but for people who live in rural areas of the United States where cars are almost a necessity, petrol expenses add up over time. Without a decrease in the cost of gasoline, gas costs may become even more prohibitive. Tesla cars may end up being more affordable for buyers in the long term. Tesla has an advantage over its rivals since it was one of the first businesses to really consider electric automobiles. There hasn't been much of a threat from Tesla's main rivals in the electric vehicle market. Along with some of the most cutting-edge self-driving technology available, Tesla vehicles also have some of the lowest maintenance costs. By charging more for user-friendliness, they are effectively copying what Apple did to smartphones. Long-term, Tesla's rivals will undoubtedly overtake it, but given its popularity, Tesla will continue to account for a significant portion of EV sales. Tesla produces a wide range of energy-related items that generate money, including solar roofing and storage or charging systems. Tesla isn't just an electric vehicle maker. This puts them in the spotlight from a variety of perspectives, and they will undoubtedly profit from the transition to renewable energy sources. In conclusion, I think Tesla will continue to exist for a very long period. Market attitude may not support the high figures Tesla is known to consistently get, even if Tesla maintains its leadership position and the globe eventually adapts to renewable energy. It's still critical to understand how volatile the market is. Tesla will likely experience a recession if the current global situation worsens, just like the rest of the market. Recessions have the potential to lower gas costs, as they did in 2008 and 2020. Tesla is still expensive by conventional standards, but the stock is more than just its earnings and market capitalization. Tesla has risen despite being fundamentally overvalued for close to 10 years. For Tesla, conventional metrics seem to be ineffectual. Additionally, Tesla has experienced exceptional revenue growth, and the firm is gradually reducing the difference between its market cap and revenue. While this is true, every favorable assessment is contingent upon Tesla's future success. Musk and his business are notorious for making outrageous promises and then breaking them. What happens if the business doesn't achieve its objectives? What transpires if the macroeconomic environment suddenly becomes unsuitable for Tesla? On this channel, we are pro-Tesla though. In a world where governments are shifting to renewable energy, it's natural to expect Tesla's value to increase given the company's rapid expansion. Are you a Tesla bull or bear? Post a comment below.